2025 was a horrible year for you. Probably blew a lot of accounts, lost a lot of money to prop firms, to a broker, and now you are frustrated, thinking about what next, what can I do differently in the year 2026 to allow me improve and earn better in the new year. Now, moving into 2026, these are three most important and critical mindset shifts that you must have to improve your profitability in the new year. Now, the first thing you should understand as a trader is trading is not your way out of poverty. You have to learn to think of trading as a high yield investment or as a business. And business typically doesn't work in the first year. So you have to learn to treat trading as a high yield investment or as a business. This means that your basic need for survival have to be met by a job, maybe sponsorship from whoever, but it's important as traders to find a means to meet our basic need. And why is that? When you do not depend on your next take profits, you are psychologically more balanced. You feel the effect a lot less. The effect from a stop loss or the excitement from your take profit, you feel it a lot less. And it is in that stability that you find yourself in what I like to call the trading flow state, where you just come into the market, execute, and you don't really care about the outcome. You just care that you have followed your edge. So, number one, remember, treat trading as a side investment and not a way to survive. Once you have been able to solve that problem, which means you may have to get a job, find something, a business or whatever to sell, at the very least, preserve your daily expenses. Your basic needs should be met one way or another. Then you can now start treating trading as an investment. And this is what it's going to be like. Let's say you have a monthly income of, let's assume, $1,000. You can now decide this month I'm going to take out 10, so rather this month I'm going to take out $100 to invest in my trading career. So either I use it to buy a prop firm that I trust, or I fund my own wallet. So basically, you have a structure for growth. If you are investing in your own wallet, and let's say in this month you blew your $100 account, there's another $100 coming in. So it takes off the pressure and you improve significantly when there's less pressure. Or you buy in a prop firm, and then when the money for the next month comes, you save it, knowing fully well that I have some form of backing. So it also takes off the pressure. Basically, you want to take the weight off your trade, take the expectation of a take profit off it, take the expectation of your stop loss off it by meeting basic needs at the very least. The second thing you should have in mind as a trader is that the market is always moving. It means you don't have to fixate on this particular setup you are working on. The market is always moving. When you think like that, it's kind of like an abundance mindset. If this setup doesn't work out, I don't have to force it. I don't have to enter early. I just know that there's going to be another one in front, because of the truth, the market has been moving for years before now, and it's probably going to keep moving. Understand something. The market is always moving. There's no need for the pressure. When you treat it with that mindset, you see how you are light about it. You look at the market, you expect, let's say, this support and then this resistance and then this breakout. So then you found the support and then you found the resistance and then you are waiting for the breakout. But the breakout isn't pulling back as you would love to see before you take in your entry. If it isn't pulling back and there's no clear entry definition, you don't have to force it, because you know this setup can pass me by. There will always be another one. So understand this. There is always something new going to come out in the market. And this means one or two things. This means two things rather. It means that yes, you just hit profits. The market is always moving. There's another chance to either make more or lose the profits you just made. So you get the message. Understand that the market is always moving, so you have to be slow to to forcing things out of the market. You don't have to express your fears on the market because you know after this setup there's another. Number three, trust your strategy. This is the most important characteristics or mindset or element of courage you should have moving into the new year. And because we are all dependent on a strategy that works. Now, your strategy does not come from the fact that you have studied the entire ICT course, nor does it come from the fact that you've studied everything in SMC. Neither does it come from you being fully versed in the knowledge of retail trading or fundamentals. No, knowledge is good, but your strategy is your strategy, and it is only called a strategy per se because there is data to back it. Which means if you trade any system that you have not on your own back tested or over time journaled enough for data to tell you that this strategy works X% of the time, then you do not have a strategy. So I advise before the new year, work on a strategy. And this is how you should do it. Whatever kind of trader you are, swing, scalper, whatever, first you want to understand what your edge is. Strategy is made up of two parts, the edge and the risk management. Yeah, risk management is a big part of your strategy. The edge and the risk management. The edge is what you see in the market that triggers you to buy or to sell. That's your edge. So, what do you see in the market? Your risk management could be as simple as 2% per trade. 2% of whatever the account size is. Meaning, if you have $1,000, 2% of that could be, I think, $20. So you are risking $20 per trade. If you lose $20, you are now looking at 2% of $980. So percentages, no matter the account size. If you go higher, it's 2%. If you come lower, it's 2%. 2% is 2%, no matter the that might be what will work for you. However, you have to run these numbers and make sure you have data. Strategy are not emotional, they are data driven. The market in itself is data driven. Your edge will show up X amount of times in the market. That's why there is never 100% win rate in any trading strategy because that strategy is going to show up X amount of time in the market. So you need to know that's what you have to work on. You need to develop a strategy that involves risk management and edge. Edge should be clear and simple. I see this, then I see this, then I see this, then I probably wait for this, then I do this. In that order. And you must follow that order no matter what. How do you learn to trust your strategy? First, after you have created your edge, which simply means whatever type of trader you are, whether you scalp, whether you use indicators, whether you are a swing trader, you have to know your systems. Pretty much a flow or a flow chart or an organogram. Pretty much in the order of which events or data should show on a chart to trigger an entry. Simple. So when you have that clearly written, you can decide to backtest it. Get yourself a software, TradingView Premium, 1 month, wherever. I'm not sponsored, but I'm just saying those I have used. There are other backtesting software out there that you can take. Now you want to test this data, this edge, and the risk management strategy hand in hand. So you can say this edge and this percentage risk per account. Simulate it, paper trade it, and be brutal about it. Don't try to wave yourself towards a win. If there's any in-betweener, most likely just push yourself in the loss. Be brutal about that test. Then you run it through that back test, through that trading software. You can backtest it. Take out time of your day to actually backtest. It will give you closing on 100 trades, you must have pulled out at least 100 trades from that strategy. And then you see the numbers. After 100 trades, how many did I win? How many did I lose? How many percent did my account grow after 100 trades? And trust me, if your backtesting is not giving you any real financial increase, even at backtesting level, that strategy is literally trash. So you have to improve on it or find something new. So learn to trust your strategy. You can only trust your strategy with true data, not gut feeling. No, true data. In fact, your test for if you have watched to this end, this is your first test into becoming profitable in the year 2026. Clearly define your edge. Clearly define it. Clearly define your edge. Clearly. I repeat again, clearly. It should be clear. It should be easy for a beginner to understand. Then go on any software you use to analyze your trade. Find a way to backtest it. Get premium if you do not have, whatever. Then at least 100 to 200 trades. Simulate it. Get it from the backtesting data. Also, in that vein, also get a calculator to calculate how it affects an account. So you can say, as I'm backtesting this first 100 trades, I'm going to start with $100 account and see with a 2% risk per trade. You see how it affects the growth. These are key points you want to get out of that data. First of all, what is the win rate? How many wins did you get out of 100? You have to know that. Secondly, what is the longest losing streak? And what is the longest winning streak? You have to understand, because these are waves that are going to come in within as a trader. Now, if you have gotten to this point of this video, it makes you value what I've been speaking about, and you can only do me an honor and support the community we are trying to build here, or that I am trying to build here, with a simple subscribe so you can see more. Thank you very much. Yours truly, Ben. And while trading, remember to stay nonchalant.